Dear patrons, during the past year, there has been a surge in interest for all things digital, most notably cryptocurrency. As a man who passed on Bitcoin when it was trading at $1, no one has felt more pain watching the prices of these assets go up than yours truly. With that being said, digital assets are going to be a part of the future, and the entire market is waiting in anticipation for Coinbase's massive IPO scheduled for next month. My take is you have several companies that are currently public, and our next presenter happens to be the first and only digital asset ecosystem comprising a crypto exchange to be listed on the NASDAQ. Diginex, ticker EQOS, is based out of Singapore and has two main areas of focus, one on the derivative side and the other on the digital security side, both in the early innings in regards to size, expansion, and opportunity. Joining us on the call today to give an overview of Diginex, it is my pleasure to welcome CEO Richard Byworth. Rich, it was a pleasure connecting with you earlier this week. Thank you for updating our community on your story and vision. The floor is now yours.
Great. Thanks, Chris. Pleasure to be here with the community again. So Diginex has a very broad aim, and that is to bring digital assets to the world. So what do we mean by that? We mean effectively taking everything from where we are today with cryptocurrencies to the next phase of growth. And that's through two main conduits that I'll go into. So Diginex, as Chris said, is the first and only full digital asset ecosystem comprising a crypto exchange to be listed on NASDAQ, but not for long. We are anticipating the listing of Coinbase on NASDAQ in early April under the ticker coin at a reported market cap of $100 billion. Coinbase is a more mature business than ours. We are at a market cap of $440 million, so 0.4% of that market cap of Coinbase, and I think for a number of reasons worth exploring a little bit further. So the two main areas that we're focused on delivering on, that is crypto derivatives and digital securities. Digital securities is a slightly longer term play. It's more about leveraging the blockchain networks to deliver securities and disrupt capital markets. Capital markets today are a $200 trillion market, so that opportunity set is massive. I'll go into how we address it today, but more of the focus is on the opportunity set here and now, and that's crypto derivatives. If we look at the crypto derivative market, volumes today are approximately 3 times the spot market. We see the current Bitcoin and crypto spot volumes at about $15 billion and other crypto derivatives around $50 billion. These are volumes per day. Now, if we adjust that to the traditional market where we see FX and interest rate derivatives somewhere around 100 to 200 times the spot market, we can see that the area of growth that's probably likely to be the most seismic is within the derivatives space. So this is where we're focused. We have built an ecosystem that really is focused on the prime services stroke private bank model for digital assets that allows users to use their crypto as collateral for derivatives and to start to really grow that market. And I'll explain it more in a little bit more detail. Before I do, I wanted to just highlight what we've started to see in the institutional space, a massive uptick in interest over the course of 2020 on the back of what we've seen from central bank policy in response to the global pandemic. We now have 80% of institutional managers surveyed recently by Fidelity believing that digital assets are appealing, and 22% of those having already started trading derivatives. So I'm sure many of the listeners today have heard of a few of the moves in the space in last few months alone. Tesla buying Bitcoin on its balance sheet, MicroStrategy leading the way in terms of showing how to lever the debt markets into seismically increasing their Bitcoin holdings. You've had traditional asset managers from MassMutual to Tudor to Ruffer and Guggenheim all starting to take very large positions in Bitcoin. You've seen the payment processing providers move into the space, as well as the traditional banks. So we're certainly here. We're at the early stage of adoption. These are probably the biggest names that have started to get involved, but more and more we're seeing some of the largest institutions in the world start to participate in this space. So we're really at the beginning of a really quite huge shift in the way that crypto and digital securities are going to make their way into the financial services infrastructure. So just to talk a bit about Diginex and how we are capitalizing on this massive opportunity. We have our own exchange, Equos, that sits in the middle of our ecosystem. Each element of the ecosystem providing value and flow into that exchange. We have our own segregated custodian built by Ministry of Defense security specialists out of the UK. We are certified by Crest. We are accredited by Cyber Essentials Plus. We are the only player in the space to have that Cyber Essentials Plus accreditation for cybersecurity, and that is a Ministry of Defense designed standard for cybersecurity. Access is our own multi-venue trading platform, which allows people to plug into two of the world's largest trading technology providers, Itiviti and FIS, and actually trade crypto through their portfolio management systems, their order management systems, and their execution management systems. Itiviti is the main partner we're working with closely. They have 1,600 institutional accounts that are looking at getting access to crypto. Access allows them to trade not only on our platform, but also on Coinbase, on Kraken, and many other different exchanges. So they get the broad liquidity of the entire market while paying us fees. We also have our own capital markets business, which I mentioned is to take advantage of that hugely transformative technological moment where capital markets start to be powered by blockchain. Today, Equos Capital is a securitization business focused on private equity funds, and hard asset securitization. So moving all of those into digital securities. We have our own fund management business, Bletchley Park Asset Management. Bletchley Park is effectively a fund of hedge funds, which allows us to provide a portfolio approach to the very unique alpha that's available in crypto. Different types of alpha include quantitative strategies, algorithmic, long short, arbitrage across things like the grayscale premium and discount, arbitrage across exchange, arbitrage triangular across the 8,000 different cryptocurrencies that there are out there today. Just for guidance, our fund produced 35% in the last 12 months compared to your traditional alpha focused funds that are somewhere in the region of about 7.5 to 8%. We have Equos Investment Products, which is listing its first tracker product next month in Germany, a Bitcoin tracker fund. But this is the business that will start to fuel the options business. This is where we'll start to list structured products and issue structured products, which then fire into Equos and effectively provide liquidity into the listed options markets that we roll out in September. We're adding borrowing and lending to the platform, doing our first institutional trades. We did our first test trade this week. We're doing our first institutional trades in the next few weeks, and then integrating that into Equos itself so that people can use the platform to borrow against their assets, but also lend their assets out and receive interest on Bitcoin and on ETH and other cryptocurrencies. So that's the ecosystem, and hopefully you can see how each of the businesses accretes value towards that Equos exchange. And by value, I mean predominantly through flow. This is how we make our money. So these are the various different businesses and where they make money. So as you can see, the average fee base for Equos is around 2 to 4%. This is a much more institutional fee rate, but we actually offer it to all of the traders on the platform. It does range based on the volume that you achieve, but the average is around 2 to 4 basis points. Access, we charge an extra 2 basis points on any flow coming through that platform. The reason that people use it is obviously that multi-venue access, but also all the various different algo strategies that are built into that as well. Our fund manager is a very traditional 1.5 and 15 performance fee versus management fee structure. Our custodian has a flat rate of 40 basis points per year with 10 basis points of withdrawal fees. On the Equos investment products, the management fee is about 1.5%. And this is seeing already very high demand from our distributors across Germany before even launch. Equos Capital is very typical sort of advisory fees on typical investment banking. It can range from anywhere. We have deals ranging from 1 to 7.5% distribution fees. So this is the roadmap that we have coming in the various different areas. So Canada Q2 is where we're at now. These are the things that are rolling out. Equo Coin actually launches in the first week of calendar Q2. I'll go into a bit of detail about that. There's some really exciting stuff happening around derivative margin, isolated margin, user-defined margin, cross-asset collateralization, and managed accounts for our asset management business. You may have been asking yourself, how does the asset management business benefit the Equos exchange? Well, any manager that's uninvestable from a diligence perspective and operational perspective may be investable from an investment due diligence perspective. We can invest in them through managed accounts, as can other investors using the Equos platform. So I'll stop with the roadmap there and move on to the Equo coin. We are the first NASDAQ listed company to issue our own utility token. This is focused on the various different aspects of derivatives, so cross-asset collateralization, allowing people to collateralize their derivative trades with Equo as an asset, also providing enhanced interest. So I mentioned borrowing and lending before. If you hold Equo against your assets and that you're lending out, then you can get increased interest through that coin as well. We also give people airdrops for other tokens that will be issued in the future from the rest of the ecosystem, as well as daily staking rewards. So the minute you earn a bit of Equo, you end up earning on a daily basis further yields. This is a touch of what we see in the decentralized finance space of late. Is very much yield-based and daily yields and very high APYs. We also give people reduced fees on the platform for holding Equo as well. So a really nice differentiated exchange token that is already attracting a lot of interest. We launched the awards of Equo on March the 16th. And we saw our largest ever retail day on the platform on that day, as people started to really clamber to get on their hands on this token. So it's a really great product. It was designed by some of the smartest guys in the company, including our Chief Product Officer, Neil Shepherd, who is an aeronautical engineer by training and does a lot of the design around the derivatives for the platform and speaks extensively around crypto derivatives in the public space. We get asked a lot about how to play crypto in the market. Obviously, owning the underlying asset is one way. Owning a fund like Bletchley Park that takes advantage of the unique alpha that's available in crypto. Having listed products like beta trackers, like Grayscale, and of course, Equos' own investment products. And then into mining companies that are listed. So Riot and Marathon, probably two of the well-known names. But then the only real way to play in the public markets, a full picks and shovels play, is through Diginex, listed on NASDAQ, as we said, under the ticker EQOS. And I'll stop there so we can have some questions from the community.
Rich, we have a ton. Okay, so if anyone wants to ask a question, you can use the chat platform on Zoom, or you can ask it within the Q&A, or you can email me at chris@ldmicro.com. So Rich, when you are ready, let me know and I will go through them.
Let's go. Ready as always.
I know you'll love the first one. What is a derivative?
What is a derivative? So derivative by definition is effectively, if you think about equities, it's a different way of playing the underlying asset. So it's a derivative of that asset. In the particular space that we're referring to, we're talking about options, futures, Delta One product. So today on the platform, we have a very nice Delta One product. It's called a perpetual future, which allows people to take leverage into Bitcoin, manage that leverage with their collateral, and trade around in quite an impressive way. The product's very nice. I trade it. I trade it myself very regularly.
So the follow-up to that is a crypto derivative the same in form and function as a traditional derivative?
That's a great question. And in fact, the perpetual future that I just mentioned is something that's quite particular to crypto. It has no expiry, so you don't end up with this issue that you have in the futures market where every month or every quarter you're having to roll those futures to sell the front month to buy the next month, the next quarter. This is a perpetual expiry, so it never expires, and it means that you're just paying a daily funding rate that is basically just the difference of the basis between that and the spot market.
What is proprietary about Equos, and do any of your competitors allow trading on the derivative side as of now?
Yeah, we do have quite a few competitors that are in the derivative space. The big differentiator with Diginex and Equos is that we are very focused on regulatory operations. We have a very strong KYC and AML standard. Many of our competitors are in the process of being investigated or shut down or having issues with various governments due to some of the KYC and AML issues that they've had, particularly. In the case of a couple, it's actually providing access to US residents without proper US licenses. And just on that point, we do not actually allow US residents to onboard to the platform at this point in time. It will be on the eventual roadmap, but because it is fraught with a lot of complexity, it's state by state regulation, we have decided to just focus on Asia and on Europe for the time being.
So these next few questions focus on regulatory. Where is the SEC currently regulating? When is the SEC, well, in this case, where is the SEC currently regulating the framework of tokenization? So I think they're looking at the time frame here.
Yeah, no, sure. I mean, I think Gary Glenzer is a huge proponent of tokenization and the value that can be had around security tokens for the capital markets. In terms of clear definition, there have already actually been a few security token offerings that have been cleared by the SEC. So in that regard, the US is actually probably ahead of quite a few other regulators globally. We're working with a number of regulators in terms of helping them adapt their security law regulation to allow them to have digital securities within that framework as well. But most regulators are looking at this in quite a positive manner.
I think this was a very interesting follow-up. Are they reaching out to the companies in the space for insight and information? Sometimes they do, and sometimes they don't.
Yeah, they do. In fact, all regulators are doing this at the moment. The regulators themselves are trying to learn. We actually spend a lot of time with regulators, educating them. The early part of the company, a lot of the focus was in Hong Kong. We're now a Singapore-based company. So we work with both MAS and the SFC. We've done, I would say, about 4 different teach-ins with the SFC, that's the Hong Kong regulator, around things ranging from custody to asset management to how derivatives trade. We were consulted by MAS, the Singaporean regulator, about how to think about derivatives in this space. And we brought, our head of product. I attended, as did one of our largest investors, which is the CIO of one of the larger hedge funds in Asia, attended to talk about derivatives and how actually they will be significantly accretive to the space and its growth.
Well, this is a perfect segue. How is the regulatory oversight in Asia and Europe right now, and are they farther along in their framework than North America? Thank you for the question.
Yeah, all really good questions. So the Singapore regulator has put together something called the Payment Services Act, which effectively allows for digital payment token exchanges like ourselves to operate. Coinbase and others are operating under that framework within Singapore as well. Um, Hong Kong has put together a regulatory framework that we've consulted on as well around virtual asset service providers. It's a little bit more stringent than the Singaporean approach, and I think they're being very thoughtful about it. They're not wanting to run too far ahead and make a mistake where they shut out the industry. Both those two jurisdictions actually have an enormous amount of crypto business happening within them, and both of them are very competitive in terms of trying to attract business, and so they don't want to cut off their nose to spite their face with over harsh regulation. But both of them moving forward quite aggressively, and I would say very credible regulators.
How much did it cost the company to build its own exchange?
So look, we've been building the company for 3 years. We've spent an enormous amount of money on the build, on making sure that we've got the best possible framework and ecosystem. We have probably spent over the course of the life of the company probably about $100 million on the overall build.
What are the biggest expenses of running it on a daily basis?
It's mainly staff costs. So actually, there's a lot of operational support, engineering. We have a lot of devs pushing forward new product. We have a lot of product guys, business analysts. We have support staff in Vietnam, so we keep our costs low with that sort of a jurisdiction where you get very, very strong talent, but obviously at a lower cost base. We do have a lot of financial services expertise within the organization. Obviously, building out derivative business from structured products all the way through to traditional listed product. You need a lot of capability from financial services. So yeah, staff is probably the main cost for the organization.
And then I thought this was a valid question. Richard, can you tell us how you screen for Bitcoin that has been a part of a criminal transaction?
Yeah, no, it's a great question. So there are two major organizations that we use, Elliptic and Chainalysis. So Chainalysis is probably the more well-known. It's used by the FBI. It was used by the FBI in tracking a lot of the dodgy transactions that happened on the Silk Road back in sort of between 2012 and 2014. So no coin comes onto our exchange without being checked by both of those service providers. And that's not a guarantee that you have on many other exchanges. So this is the thing that I think is quite interesting is you go out and buy Bitcoin on an exchange today, you want to make sure that Bitcoin is not something that's been used in a criminal transaction. You want to make sure that it's clean Bitcoin, and you have that guarantee with Equos.
Excellent. On the exchange, do you disclose what percentage of your transactions are Bitcoin and what percentage are Ethereum?
Yeah, we do. It's all open. If you go onto equos.io and you look at the markets page, you can see the daily volume for each day, for each market as well.
Okay, so I'm just going to warn you right now. These are the valuation questions. So here goes nothing. What do you think is the biggest reason why your valuation is not as high as Kraken and Binance? And trust me, this is just kind of the part one of four.
Okay, sure. So look, I think we're less well known. We're a new exchange. We've been operating since July of last year. When we listed, we were doing around $1 to $3 million a day. If you look at our website on a regular basis, you'll see we're doing anywhere between 20 and $30 million a day. So we're growing rather rapidly, around 10x of growth since that listing in October. So over the last 6 months. And obviously with the growth of derivatives and where they're going to come from, I think that is only going to continue to go more parabolic. So yeah, look, I think we're underappreciated at this point in time, probably undervalued from a perspective of just not being well known in the market at this point in time.
Rich, I'm going to take responsibility for this question because Voyager Digital presented a couple weeks ago. And the question is, how come Voyager has gone from a sub 100 million market cap to 3 billion, and you guys still haven't hit $1 billion yet? I guess thank you for the question.
Yeah, sure. I mean, I think Voyager have been listed and operational for a bit longer than us. So as I say, I think it's just a case of us getting known in the market. I think we're going to start to see that play out as more of our product kicks in. I mean, this Equo token is starting to get a real focus for the company in the crypto community. People are really paying attention to it. It is very differentiated in its utility and as well as the way that you earn it. So people getting excited about that. I think that plus the rest of our product rollout, plus as volumes start to tick higher and higher, we become a much more important place for people to bring their liquidity. And I think, you know, it's all self-perpetuating. As we say in traditional finance, flow begets flow. And we get that joke, we get how it works. And so we're just building towards it.
And this is the last valuation question. Do you think that there's a correlation between coverage on the street and why you guys are underappreciated? Thank you for the question.
Yeah, no, I think that's a very valid question. There's very limited research out there on us at the moment. We are starting to see some of the Wall Street banks start to pay attention. I think that there will be some research coming to market from some of these banks. Obviously, the timing with Coinbase, I think that, you know, the natural comparable in the market is ourselves. Because we're the only other player listed on NASDAQ. So I think that more and more and we've seen this already, the research departments of these investment banks, they're starting to try and get an understanding because they know Coinbase is coming, which will propagate further research coming on Diginex itself.
Rich, this is my question. Do you think there's a correlation between revenue and market cap?
Yeah, no, I do. Absolutely. And I think there should be. You know, we're very much in the growth stage of our revenue. As I said, you know, when we got listed, we were doing $1 to $3 million on the platform in a day. But you know, things change very, very fast as you continue to grow that. So I think you know, what our growth upside versus other players is probably quite parabolic, as I said before.
So let's go through these as quickly as we can. Is the company listed on the Asian markets?
No, we are not.
Okay. How much of the company is owned by insiders?
We did this math the other day. I think it's around 25%.
Do you guys directly compete with Grayscale?
We do in our Equos investment product that we launch next month. So that will be directly competing with Grayscale, lower fees, more efficient creation, redemption, better product, directly can redeem Bitcoin from that. So yeah, I expect that we'll be taking quite some market share.
What type of cybersecurity system do you have to address hacking?
So our security team is focused, it is ex-government security services. One of them is ex-NSA. The others come from the Ministry of Defense in the United Kingdom. We have very secure process and procedure around key management. We do regular background personal checks on the people responsible for key management. And as we get higher transactions, then more people get involved in the process. We're also penetration tested by NCC Group. NCC Group are the top penetration testing company in the world. They penetration test Google, Facebook, and Amazon, and Diginex.
You guys recently raised nearly 40 million. Is most of it going to be used on the derivative or the digital security side?
I think the digital security side is a business that sort of just ticks along in the background. The big focus of the company right here, right now is around derivatives. So if you think about the expanding of that expansion of that staff element, it's around product design, it's around the devs that are capable of doing this, it's around quants, and it's around the structured products guys. So big focus on hiring in all of those areas.
Out of all of them, this was my favorite. Do you think half of the investment firms will own some type of digital currency in the next 2 years?
That's a great question.
Yeah, that's
Um,
a hard one. I would almost
I
lean
think
towards,
half is a big number.
yeah,
Half is a really
I
big
would
number.
say no.
Yeah, I'd say no. I'd say, what are we at? Probably 1 to 2% viably at this point in time. I would say that you're going to see that grow exponentially to 30, 40% over the next 2 to 3 to 5 years.
So I think this is important. The JP Morgan coin,
Yeah.
and what Goldman Sachs is doing. Are there more similarity than differences? Is it going to be something that's going to be easily compatible with what you guys have built? I mean, what's distinctive for, guy investors like me or consumers kind of ascertaining uh, which is which, and what do they ultimately do?
So I'm not aware of Goldman issuing any kind of coin. JP Morgan's coin is around internal settlement. So what they're trying to do is effectively provide a settlement basis for dollar-based settle. I think that this is quite different to cryptocurrencies. It's particularly Bitcoin is around having a digitally scarce asset, and I think this is what is making all these investment firms so focused on it against the backdrop of what we're seeing from the global central banks. You're putting me off slightly, Chris, by laughing when you're reading the questions.
Oh yeah, well look, I mean, because I got to tell you, this is funny. Are Asians more advanced and savvier when it comes to digital currency? And for full disclosure purposes, I consider myself Asian, so for me, it's probably a no. But let's see what Rich says.
So it's a really interesting question. I think Korea is actually probably the largest market in terms of percent of population adopted cryptocurrency. Japan is huge. China is huge. You've got all the Southeast Asian countries as well. Indonesia, Thailand, really moving into this space. Thailand, like India, they're very focused on gold as an asset, and so they really like Bitcoin. And the same in India. I mean, Bitcoin's just been banned in India, but demand from over in India is larger than ever. So yeah, Asia is very aggressive on the take up and the value proposition behind cryptocurrencies.
So staying within the continent, Rich, can you give us some color as to what the Chinese UI UX is for the third quarter?
Oh, sure. Yeah. So this is really about making sure that the platform is accessible for Chinese speaking users, making sure that a lot of the education material has all been translated into Chinese, and that it could be used by Chinese native, i.e. non-English speaking people. It's probably not something that we need on the public roadmap. It's just an internal thing.
Of course. So this is from Forrest. Forrest, thank you for the question. Is the growth of customers and trading volume on the exchange in line with your previously provided revenue estimates for the next several years? Are you on track in this regard?
So we don't provide revenue estimates at this point in time because we're in such an early stage of build. We have no official revenue estimates. We're just trying to work that out so that we can provide reliable revenue estimates to the market. I would say that it's bootstrapping volume and flow is at this sort of level from 1 million to the 25 million level has definitely been challenging and difficult. Once you get past 25 to 50 million on a daily basis, it becomes significantly more easy because institutions looking for liquidity end up coming and choosing your platform. At 50 million on a daily basis, we'll start to move into the upper echelon of exchanges on a liquidity basis. We already have a number of institutions that are ready to onboard, but they've said, look, once you hit that $50 million target, we'll be onboarding and transacting.
Roger that. So let's go through the Q&A portion of the Zoom app. B asks, how has the asset management performed during the market pullbacks over the last year? Thank you for the question, B.
Great question, B. So our asset manager is very alpha centric. So it's focused on that unique alpha. And I'll give you an example of one great example that we saw last week. So Kraken on their exchange at a very difficult time for liquidity, their entire book disappeared for Ethereum. So people putting in market orders ended up selling down to like $700 when the asset itself is trading at $1,500. So people that we invest in have dollars and funding on all these different exchanges and would have been sitting there just buying ETH at $700 and then flipping it out elsewhere at $1,500. So these sorts of trades aren't really market directional dependent. It's really about that alpha, as I expressed before. So the last 12 months, the fund's up 35%. I think I mentioned, against the sort of, an alpha centric fund in the traditional space, looking at 5 to 7%. On the months where Bitcoin is down, we always outperform massively. It's just that type of fun. We have had issues where we've been down on a particular month, but never as much as the cryptocurrencies themselves.
Impressive. So Chris has a question that essentially, I would say it's a follow-up. And I don't know if you disclosed this, but how big is Bletchley in terms of AUM?
We don't actually disclose that.
Roger that. Okay. Guy, can you guys give an update on the exercise of the warrants? Also, do you have any provisions for potential legal liabilities? Thank you for the question, Guy.
Sorry, can you repeat the first part of the question around the warrant?
So it's asking, they're asking in terms of getting an update on the exercising of the warrants in the company.
Okay. They just want to get an update in terms of how many warrants have been exercised. The final exercise day is today, actually. So we will find out how many warrants have been exercised probably by about Wednesday next week. But it's looking okay. I mean, obviously the price has pulled back quite significantly. So I imagine that we'll continue to see conversions happen in the next 24 hours. On the legal side, do we provision for legal liability? We do have insurance in that regard, the sort of standard D&O insurance, and we haven't provisioned for any particular litigation.
And there was also, one more question: any employee-related liabilities?
Well, I don't quite understand that. In terms of insurance of
Right,
employees,
in terms of having provisions for employee-related liabilities as well. I'm assuming.
I guess a lot of the hacks that happen on these exchanges happen due to insiders. So maybe that's what the question is referring to. We don't have any provision of that. We do a lot of focus on background checks. As I said, we have specialists from government security to really assess the personalities of the people that are given access to the keys. So we don't have any provision for that. No.
Andy, howdy again. The comparable to Coinbase showed Equos focused on Europe and Asia, whereas Coinbase is the US. Do you have eyes on the US market?
We do have eyes on the US market. We'll be looking at moving into the US. Probably not for a little while, though. As I mentioned before, it's state by state regulation. It's quite an administrative burden. But if things are really exploding, then yeah, we'll be moving into the US sooner. I would imagine, though, that we'll be looking at a sort of a 1-year timeline.
Will you be applying for New York bit license and enter the US markets? That is a question from Stephen.
Well, that'll be part of the same process.
Yeah.
So yeah.
And then will you disclose trading volumes in AUM? I think we've already discussed that. Yeah. Who will make the markets and manage the risk of Equos listed options to be launched in September?
So we have a number of agreements with different market makers. We don't market make on our own exchange. Again, one of the differentiating factors of Equos is that we don't trade against our clients with information that we have about our clients. You will have that experience on pretty much every other cryptocurrency exchange. So we don't market make on the exchange. We have a number of agreements. One of the ones we were public with was GSR. So GSR Markets are one of the largest market makers in crypto, 500 million balance sheet. They're very, very large in the options market making space as well. So they'll be the main market maker in the options market, and we're already discussing with them around transactions from the structured product business as well.
I noticed that my good buddy Calvin is on. Good to see you, Calvin. And his question is, what is the current cap structure and the fully diluted share count?
I'm going to defer to Ross Dunwoody, who's on from our IR there. I know that he looks at this number daily. Ross, do you want to click in?
Sure,
And
I'd be
we'll-
very happy to get. Can
Oh.
you hear me, Richard?
Yeah, we got you.
Sorry, Chris.
Oh, not at all. Please go ahead.
So we have 37 million effective shares outstanding currently. So yeah, that's excluding any additional sort of warrant exercises. So at the moment, it's 37 million shares.
Thank you, Ross. And then B is back for more. Can you give any more details around the investment product that will rival Grayscale's ETF?
Yeah, sure. So it's really around efficiency, around something that in the ETF space is referred to as creation and redemption. So you can create a Grayscale unit by delivering Bitcoin, but you can't redeem it. And this is why you end up with these massive discounts and premiums as the market moves in this product, because it's effectively inefficient. Ours, you can create and you can redeem on a daily basis, which means that you will never have these massive discrepancies between the underlying price and the price of the product. We also have lower fees, and you know that any of your Bitcoin that you purchase through that certificate are held in a market-leading custodian, DigiVault, under that Ministry of Defense security level of accreditation that no other firm in this industry has.
And this is from an anonymous attendee, my favorite. When can I open up an Equus account in Singapore?
That will be as soon as the MAS finalize their licensing framework. We have approval to operate currently, but they haven't actually awarded any licenses. And until they do, the Singaporean government do like to, what they feel, protect Singaporean citizens. And so they, until those licenses are given, we will not be able to onboard any citizens from Singapore. And DBS, the bank from Singapore, has the same issue at this point in time as well.
And then the final question is from Jason. What's the main reason why you guys don't disclose AUM for one of your major business lines? You know, don't you feel that it would help with transparency? Thank you, Jason.
Yeah, no, it's a great question, Jason. I think we probably will. It was largely because by the time we were listed, it was really just using partners and insiders' money to test the track of the fund to make sure it did what it was supposed to do. And now we've started to really grow assets based on having well over a 1-year track record. I think it's a very good point. We could go public with it, but obviously we should do that in the proper channels.
So it's the moment you've all been waiting for, my time to ask Rich questions. Okay, so what do you think that blockchain will be capable of doing for the average American in the next 5 years?
I think it will be transformative for people's wealth. I think what's happening today in the United States is effectively a complete destruction of fiat money. And it's not just the US, by the way, it's every single government across the world. And by having Bitcoin as an alternative, everybody has a way to store their wealth, store their value, and store their time. And I think this is without doubt the most important thing that has been given to the world by the anonymous creator, Satoshi Nakamoto. I would say that more broadly and more commercially, blockchain and its likely disruption of capital markets is going to be just a world-changing thing. You think about what happened with Robinhood the other day, where they stopped people trading GameStop because of margin requirements that they had. Well, if GameStop stock was tokenized and you could just trade it and transact it with anybody you pleased, then this is not going to get in your way. The other way would be think about 401k switching and how painful that is right now when you've got all your assets in a particular 401k provider and you want to move it somewhere else. That takes weeks and months in terms of paperwork and complexity. But if you have it in digital form where you're controlling the keys, you're controlling the transaction, you don't actually even need those 401k providers. You can do it yourself. And that is exactly what we're looking at doing, is providing that private bank experience within Equos to allow you to basically run your financial life.
And I got to tell you, just to add to what you said, I think fiat currency has been in the crapper since they got off the gold standard. But there's, in terms of utility, I don't think there's anything that matches it. And of course, we have to talk about Coinbase, Rich, because I mean, this last year there has been so many phenomenons on the investment side that it has. I've literally tossed every single investment book I've ever read. Me being specifically a deep value investor, in many aspects, metrics don't matter anymore, at least for the time being. So let's talk about Coinbase. I was watching you present um, back in November when Coinbase was expecting to have a 15 to $20 billion valuation. And to that, I was like, no way, not going to happen. And I said the same thing about Roblox, Airbnb, DoorDash, you name it. And now you're looking at 100 bill, okay? And I got to tell you, I think 100 bill is like the new billion, okay? That's how crazy these numbers have gotten, where it's very hard to kind of, visualize this wealth being created or, down the road potentially destroyed. How does Coinbase, I mean, what's kind of your prediction? What does your gut say? Who's buying into this? And will that allow, enough attention and notoriety and interest to kind of fall on you guys and Voyager and Big and the rest of the names? I mean, what's kind of your consensus on this?
I think Coinbase will go higher. I think what you're sort of struggling with as a value investor, like many investors, is non-linear growth models and Metcalfe's law of network effects, right? And this is what Bitcoin is what other crypto is. This is why you're seeing such meteoric growth in Bitcoin. And Coinbase is the most important company in that space. And so, obviously they're focused predominantly on the spot market. This is why for us, the opportunity of non-linear growth around derivatives in a product that already in its growth is likely to be non-linear and exponential is just enormous. And that's why we do get really excited about what it is that we're building, because that growth that sits in this industry that has that potential, it's just exponential. And I think that this is why value investors have struggled with stocks like Tesla, stocks like Roblox, as you mentioned. It's the same sort of thing. You're seeing this exponential growth potential through these companies that they're not restricted by the sort of the frameworks that we had, the scaling metrics that we had in traditional companies before. Now, not discounting the fact that because central banks are completely devaluing your currency, stocks are seen as a safe haven as well. So that is also adding fuel to this particular fire.
And real estate and baseball cards and all sorts of stuff that you probably have around the house that you didn't think was worth anything. Final question, because I thought this was an interesting one that no one asked. In regards to M&A, I think that you guys are unique given your size, that you are big enough to acquire smaller companies, and you're also small enough to get acquired. What's kind of your mindset and and game plan looking out in the next, I want to say, 12 to 24 months?
Look, we're always opportunistically looking at how we can grow our business and compete faster and more aggressively. Nothing's off the table. We are, very actively looking at all opportunities, always. The fact that we are the only at this point in time, soon to be one of the only, companies listed on NASDAQ. We have our own currency. And so acquisition is something that we see as part of our logical differentiating factors. So yeah, we do spend a lot of time looking at companies that can be accretive to us.
For all those whose questions I did not ask, I apologize. If that was the case, please email me at chris@ldmicro.com and I'll make sure it gets forwarded to the right people. Rich, where can people go to learn more about the company?
So our main website, diginex.com. If you do want to have a look at the volumes on the exchange, equos.io, EQUOS, not like the ticker, EQOS. And follow us on Twitter, at Diginex Global, at equos_io, and myself at Richard Byworth, all one word.
Awesome. Well, Rich, thank you again for your time and energy today. We're looking forward on following you on your progress, and I will see you on the other side. Thank you for everyone who also tuned in as well. You guys be well. Cheers.
Chris, always a pleasure. Thank you.